everyone for joining us this afternoon in what is the closing plenary session of what has been a very eventful and I'm sure interesting few days for all of you. I'm sitting here with a man that clearly needs no introduction. So without further ado, let's commence. So President Kim, you have been touted as a man on a mission. You have some very ambitious but very difficult goals that you've put forward. One is the challenge to end global poverty, extreme poverty by 2030. And the second goal is to increase shared prosperity. What's the potential for success for these goals?
Well, Tracy, they're obviously very difficult goals. I mean, you know, and they're not goals that we came to just out of thin air. We went through months-long process of intense debate, and we asked a question. So what do the global growth numbers look like? What do the poverty figures look like? If we worked really hard and we were able to have great success in terms of boosting global growth and a growth that's shared, what would it look like? And we came to the conclusion, and it's very precise, that we think we can get it below 3% by 2030. Now, that means that over the next 15 years, global growth will have to be higher than it was in the 20 years prior to the financial crisis. So it's a big job. The second goal is one that's really quite new for the World Bank Group. And it's part of a big conversation that we're happening globally now. And it's the question that as economies grow, how can we ensure that the benefits of growth are really shared by everybody? And for us, it's very specific. We're going to follow income growth at the bottom 40%. Now, it's really quite striking me. I was flying over to Germany, and I was reading both the Time and the Economist, and both of them had reviews of the number one selling book on Amazon, which is a 680-page tome on the history of capitalism. I mean, these are books that I used to read when I was in graduate school, but to have it be the number one book and to have inequality be at the core of conversations, I think tells us something about the relevance of that goal, shared prosperity. Look, what we know is that the tremendous progress in ending poverty over the last 20 or 30 years has been about 70-75% due to economic growth. So we've got to remain focused on growth. But 20 to 25% and a good and some of the drivers of growth have been due to programs that were very focused on investing in people, on making sure that the growth was shared. So it's a big job. But we think there's coherence here. What we're saying is there has to be growth if we want to lift people out of poverty. But it's a new world. You know, I talk about the experience. When I went to Bolivia, I spent a day with President Evo Morales, and he had been not very happy with his relationship with the World Bank Group. So he told me that in order to spend time with him, I'd have to go play soccer with him. And so we flew in a helicopter in the highlands, 14,000 feet, and I played soccer with him. And as we were landing, 14,000 feet, the most remote village in Bolivia, everyone was taking pictures of us on their smartphones, and they were able to, watch shows all over the world. Everyone knows how everyone else lives, and so this topic of inequality is going to continue to get raised. We think there's a really positive story here. We think there's a role for private equity in making the kinds of investments that will lead to very strong returns, but will also have a development impact. We'll bring more people into the workforce. We'll grow the incomes of even the poorest and the most marginalized. If we can accomplish those things, then we can reach the targets, and I think the world will be a much, much better place.
Now, speaking of investments, just recently in April, in fact, the World Bank Group and you had announced that you would be increasing lending capacity by $100 billion over the next 10 years. What was the thinking or the idea behind it? Why the decision to do that?
Well, if you look at the overall needs in the developing world, so Africa in any given year has about $100 billion in infrastructure needs. The BRICS countries, just the 5 BRICS countries have about $1 trillion a year in unmet need for the growth of for building infrastructure. And so all of official development assistance is $125 billion. And you add foundation money, and it gets sort of close to $200 billion. And we were at about $50 billion. We knew that for us to have the kind of impact we wanted, we would have to increase our lending capacity. So on the World Bank side, on the public sector side, we are going to be able to double our lending to middle-income countries, which is where, again, if we want to end poverty, 70% of the people living in extreme poverty now live in middle-income countries. But the thing we're really excited about is our increasing capacity on FC. And one of the points that I've been trying to make, we were just together with all the heads of the UN agencies talking about the next set of Millennium Development Goals. And one of the very strong points that we made, our team at the World Bank Group made, was we've got to think differently about this now. The previous Millennium Development Goals were mostly about how we divide up official development assistance. And what we said was, if we just talk about ODA, we're not going to get very far. $125 billion divided up across the developing world is not going to get us very far. We've got to have a very explicit plan for how we get the private sector involved. And there is explicitly a role for private equity here. We think that some of the greatest advances are going to have to happen through public-private partnerships and just private sector investment. And the reason that we feel we can play an important role is that we're not just giving money to governments, we're not just making investments in the private sector, we're looking at how our investments in both the public and the private sector actually have a development impact. How many people get health care? How many people are educated? And most importantly, how many jobs are we creating through the investments we're making?
You talk about the private sector and also the ability or the need to help. I mean, one, it's a moral conscious decision in order to tackle things like gender inequality, poverty, social inequality. And B, when you think of private equity, it's a very sort of financial decision. I mean, when I think of private equity, the words that really come to mind are things like capital, IPO, leverage buyout. When I think of poverty, the connotations that come to mind are slums, clothing, welfare. What is the relationship between private equity and poverty? Is there even a bilateral relationship?
Well, if you think slums and what were your characterizations?
Clothing.
Food. The way to move a person out of that kind of situation, the most important way is through a job. And one of the things that we know, a couple of years ago, the World Development Report was on jobs, and the data was that over 90% of all jobs in the developing world are created in the private sector. So it's a completely new concept. And I have to say, with my colleagues, the head of the UN agencies, it's something that's new. 15 years ago, when we were putting the Millennium Development Goals together, the notion was that the private sector's role in the Millennium Development Goals is to make contributions, to add to the pot of ODA. But we're moving toward a very different view, that really we have to find ways so that the private sector can make money while at the same time have a huge development impact. And the thing is, over 35 years of working in this area through IFC, we know that it's possible. We know it's possible. There are so many different ways of doing it. And the private equity companies and the groups that we've worked with, they're really focused on growth equity. In other words, we invest in banks, we invest in companies, they invest in a lot of small and medium enterprises, and these small and medium enterprises create jobs. I think the one piece of data that I like the most about our work is that while globally the world is creating about 2 to 3%, there's about a 2 to 3% increase in jobs in every given year, our investments lead to 15% increase in the number of jobs in any given year. And that is going to be the most important and the surest path out of extreme poverty. We know now that the other investments we're making, for example, Larry Summers just authored a report with many others in The Lancet saying that improved health was responsible for 24% of growth in low and middle income countries between 2000 and 2011. We know that we have to keep investing in health. We know, of course, that the better performance on the OECD's PISA test that tests 16-year-olds is directly correlated to economic growth. So we know we need to keep investing in education. But the big new thing on the table, I hope, for the next set of the world's development goals is going to be the critical role of the private sector in making the investments. I talk to heads of state everywhere. So let's just give one example. Ellen Johnson Sirleaf, the Nobel Prize-winning celebrated leader of Liberia. Every time I see her, she says to me, we only have 25 megawatts of installed capacity, right? Sort of about the same amount of electricity that's used by Texas Stadium, where the Dallas Cowboys play, right? And she says to me, I need energy, and I need infrastructure so that I can attract private capital so they can create jobs. And she says it in the starkest terms. She says, I have a whole population of 30-year-olds who've been nothing but soldiers their whole lives. If we don't move down that path toward development, and most importantly, if we don't create jobs for them, they're going to take up their arms. So we're on this precipice. We've got to move forward. So if you look at it from the perspective of private equity, there are opportunities in the efforts to increase the electrical supply. There are opportunities in terms of investing in small and medium enterprises there. There's mineral wealth all over Africa that we have to make sure turns into a positive force that helps countries invest in education and health and helps them create jobs, because the extractive industry in and of itself is not going to create jobs. But if we manage that wealth effectively, we can really bring literally millions of people out of poverty.
The topic of emerging economies is extremely debatable. It's a very hot topic. You have countries, whether it's the BRICS or whether it's even countries such as Indonesia or Philippines, that have had in recent years very attractive growth, but are also very politically unstable, very volatile, and they have their own, different set of challenges. What would you say to investors who want to tap into the growth of the emerging economies, but are perhaps too fearful to get in?
Well, one of the things that we see is that the market just goes up and down, responding to the smallest bits and pieces of news. And what I would say is that work with us. Let me be parochial here. Work with us in the World Bank Group, especially in IFC. IFC has been in the private equity business for 35 years. The World Bank is about to celebrate its 70th birthday. And so what we've done over that period of time is try to understand the economies, both in the public and the private sector, understand what's happening in these countries so that we can be as helpful as possible in helping them down the path of development. And so there's always a lot of perceived risk. And what we would say is, work with us, take a little bit of a deeper dive so that you can understand what the risks really are. And our own sense is that the opportunities far outweigh the risks in the vast majority of countries that we work in. But you've got to manage them, and that's what we know how to do. MIGA, the Multilateral Investment Guarantee Agency, provides political risk insurance and credit enhancement. And we do it in a way in which we're able to work with the governments very closely so that threatened nationalizations tend not to happen when folks work with us, because we have such good ways of communicating with governments. We also know the structure of capital markets. We know what the political situation is. We know what the policy structure is. And in working with us, I think that people will have a much clearer evidence-based understanding of what risk is. And I think they'll be surprised at the scope of the opportunities.
Now, we simply cannot talk about emerging economies without talking about the world's second largest economy, and that is China. How concerning is a potential slowdown in China? Does this keep you up at night?
Well, I've been working on a personal level, actually, very closely with the Chinese government, and they're undertaking a huge set of reforms. I mean, they were quite explicit about it. They're moving from a growth model that focused a lot on investment and exports to one that's more focused on services and on sort of knowledge industries. This is a huge shift. I mean, it's going to lead them down a path of what we think is much higher quality growth. But if you were to look at any country that was trying to make that sort of shift, you would expect that the growth rates would slow down just a little bit. Now, in our work with them, Li Keqiang, before he was the premier of China, worked with the World Bank Group, putting together a report called China 2030. And all of the major reforms that we're seeing were really foreshadowed in that report. So what we learned was that when the Chinese government works with you and is serious about tackling a set of issues, we publish something, and they actually follow through in a very impressive way. That report was so successful. The first time I met Premier Li, he asked me to do a second report on urbanization, and we just released it. And what we learned is that China has avoided some of the pitfalls of rapid urbanization, but they've got 200 million people coming into the cities over the next decade and a half or so, and they're going to be the first country in the world to have more than 1 billion city dwellers. And they outlined with us in that report some really tough reforms. I mean, reform of fundamental issues like the hukou system, where you can only get services in the place that you're born. Those kinds of land, labor reforms are going to be tough. Our experience is that when they commit to these reports, when they commit to a vision, they follow through. The next big report that we're going to be working with them on is the healthcare system. And again, they have exploding costs in the healthcare system. They have a huge task of providing healthcare to 1.3 billion people. But what's so impressive is that if they say, okay, we're with you, let's sit down, let's put a plan together, they follow through. Look, we always have to be worried about the largest economies in the world, and it's something that keeps us all up a lot. But I have to say, I've been extremely impressed both with the strength of commitment to the reforms and their ability to adjust over time. So I have a very positive outlook. I think that even if the growth rate falls further, I think that they'll be able to respond in a way that will maintain their commitment to the reforms.
I mean, I remember back in January, you and I met in Davos, and I actually interviewed you back then. And even in January, you were still very bullish on China, and you had expressed to me, I remember in our conversation, that you were very impressed at the way China was finally implementing reforms to tackle extreme poverty. Are you concerned that if the economy in China slows down, that the people that have come out of extreme poverty are going to be pushed back in?
Well, if you look at the issues that China has wanted to tackle with us, right? Urbanization, in other words, you have 300 million rural dwellers, poor people, who are going to move into the cities. And what they asked us to do is to figure out a way for them to build healthier, more sustainable cities that would be able to provide services, education, healthcare to those new migrants. And look at the next issue that we're taking on, healthcare, because they know that this is going to be a huge challenge for them. So my own sense is that they know that they lifted 500 million people out of poverty over the last 30 years, unprecedented in world history, and they know that a huge portion of that was just because of their growth. But now, not only are they focusing on the quality of growth, switching the strategy from one that was so focused on investment and exports, they're also really thinking about how they can more effectively invest in their people. And we know that that's a critical aspect of their own growth strategy. So again, I'm encouraged. I'm just because of the fact that they asked us to work on urbanization and then healthcare, those two facts in and of themselves are also encouraging to me.
President Kim, it's no secret that you're a man that travels a lot. You travel constantly. In fact, not many of you in this room know this, but President Kim just got off a flight from Germany 2 hours ago. And he's with us here today, so thank you. Through your conversations when you travel and you meet presidents and global leaders and CEOs, when you became the president of the World Bank in July 2012, what were the top lines of the conversations you were having then versus, say, 24 hours ago in Germany?
Well,
has the conversation shifted?
It's shifted enormously. I mean, I think in July of 2012, there were questions about whether Greece would be solvent. There were questions about whether the euro would survive. We were still in very negative growth rate territory for all of Europe. It was still a situation of tremendous fragility. And so now we're looking at, global growth is now being driven by the high-income countries. The U.S. continues to grow. Europe is now, we're looking at a 1.5% growth rate for this year. We're all rooting for Japan to be successful with Abenomics. It's a very different world than it was before. And we just, Spain just was able to get a 10-year bond for 3%. And this is just stuff that you wouldn't have imagined back then, where the bond spreads were just all over the place. So I think that we're now in a situation where the downside risks are much lower. But still, there are real risks. I mean, we spent a lot of time in Germany talking about the Ukraine situation, a situation that, if it gets worse, could have a real impact on the global economy. So I think that the scale of potential disasters is definitely lower. And I think it's now time, and there's a lot of good opportunities. It's now time to think about, okay, so then what kind of growth do we want? You know, the G20 in Australia committed to 2% higher growth rates. But now, I think we're also having the conversation around the next set of Millennium Development Goals. Yes, we need more growth, but what should it look like? What kind of investments do we need to make? How can we make that growth more inclusive? And again, in this setting, I really encourage everybody to work even more closely with us at IFC, because at IFC, that's what we do. We look at not only the return, but we look at the development impact. And I think that's a question that's going to be raised more and more acutely. You know, the story I told about Bolivia is just to say that everyone's going to be connected, and everyone is going to have the ability to demand their own participation in global growth going forward. And again, the good news is we can actually make that happen in a very positive way, both for equity investors and for the poor.